Hi, everybody. This is Jeff Barton for the Mortgage Minute. Thanks for tuning in, for watching. What we try to do is bring some information on a daily or a weekly. We also have a radio show that we do and is broadcast on 8 different podcasts as well as 5 radio stations. But for you who want to actually see it, go to Jeff Barton, the Mortgage Voice on YouTube. You can see we have an hour, we have 5 different segments, and you can look at each segment. You can also go to podclips.io and see what we do there. Anyway, let's get right to it. Mortgage interest rates today, 2.93 for the 30-year fixed, 2.38 for the 15, 2.68 for FHA, 3.10 for the jumbo loans, and 2.62 for the 5/1 ARM. The 10-year yield is at 1.339. That's been fluctuating up and down. We've seen it as low as 1.16 and as high as what it is today for the last 2 to 3 weeks. We should see continuing volatility here as well as in the rates, especially if we see tapering happening sooner than later. We may see it by the end of September. Everybody has been kind of holding their breath and waiting, but at least we were foretold by the Fed that it was going to happen, so we're not going to run into that taper tantrum, as everyone has called it, from the last time the QE stopped. Also, several things happening with COVID. As COVID goes, so goes the economy. That is true for many sections. But one of the things that I wanted to talk about was the assumptions that we all had at the beginning of the pandemic and how they have fared. Some of the assumptions were that the people in large cities would exit and move to the suburbs. That did happen early on, but what we're seeing right now is that there is a return to the cities, opportunity being what it is in a larger metropolitan area. People return. Also, touch-free areas in the home and in home delivery. That really hasn't panned out as we all thought it might. And all homes, bigger homes in the suburbs for people to move into and work at home. I think there is some of that, but I don't think it's as large as what people thought it might be. Inertia has kicked in, and easier is better. There's a great deal of the population that can't really move. If they wanted to move, they are stuck where they are. So therefore, the actual income that they derive from their current job is really what they're going to be using. Behind me, you see the Malibu Funding telephone number. If you have any questions on what you see, you can always call me. I'm Jeff Barton, and I am the guy who is the Mortgage Minute and the Mortgage Voice, and my NMLS number is 79687. Also, some cities booming: Albuquerque, Jacksonville, Phoenix, and Memphis doing quite well in COVID, and subsequently are continuing to do well as we dig ourselves out of a bit of a hole. Some cities are mixed: Portland, Seattle, and Denver. Kind of not sure where we are, but are holding, and some haven't done quite well at all and have really seen either a population exodus or job loss. And those are New York, LA, Chicago, and San Francisco, some of the bigger markets that quite typically are so expensive that it's prohibitive to live in those areas anyway. So if we see an exodus from that area, maybe we'll see a reduction in rents, which we haven't seen, and a reduction in what people pay for housing, which we also haven't seen. 55% of all workers will be looking for a new job. Interesting article on Housing Wire. Yeah, I think is what it was. They talked about different groups: millennials, Gen Xers, Gen Zers, and where they are in terms of their employment. So this number of 55% of all workers going to be looking for a job in the next 12 months. Most of that is in 77% of Gen Zers, 63% of millennials. There is a large movement going on about searching for better. It has been predicted that we will see inflation, and most of it is caused by increase in salaries or pay to employees. It's a good thing. So therefore, people who are in a job or is currently paying something are looking for something better that pays them more. And why not get in on it now? Because I think what we will see is a retrenchment of that once we get COVID behind us. It may be another year, 18 months for that to happen. And as we see taper happen, as rates rise, we will see opportunities lessen. So that's why I think we're seeing a greater number of people wanting to get into newer jobs and perhaps searching for that. I'm Jeff Barton, your voice in the mortgage industry. Thanks very much for listening to the show today, and we'll be right back.